recorded, and a link to this recording will be sent to everyone that registered no later than tomorrow afternoon. So with that, please join me in welcoming Mark Hodge to the Trading Pub and his presentation on how to trade these crazy markets in November. And with that, Mark, the floor is now yours.
Thank you, Raleigh, for the wonderful introduction. And also, I want to thank Trading Pub. I know that it's a great resource for traders, and it's just a pleasure to be here and sharing a few ideas for these crazy markets in November. So what do we do in November? It's been a wild ride. Unless you started trading last week, you probably had a rocky couple of months. You might have done well with your trading. It might have been difficult because it certainly looked like a month ago that we were ready to take out all of the profits of the year and head to new lows, and you blink and a couple weeks later we're trading at new all-time highs and making new all-time highs every single day. I mean, even last week we had all-time highs in a slow week. This week we're off to making new all-time highs. And so the biggest question right now on many traders' minds is, do I jump into this move while we're making all-time highs? Do I try to sell this move because it just can't go any higher? Well, I want to show and share an idea that I think many of you will benefit from, and it's a unique way to trade the markets where it really doesn't matter if the markets continue to make all-time highs or not. So in this session, we're going to talk about what's working in November. I'm going to share a strategy for determining the direction of the market, helping you determine whether or not the market is likely to move higher or lower. And I'm also going to show how to get an edge using probabilities. Probabilities are important for the method of trading or style of trading that we're going to talk about today, and they could be very advantageous when it comes to choosing the market and determining how and where to get into a trade. Before we get started, I do want to share a very important risk disclaimer. Futures and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. So don't trade with money that you cannot afford to lose. This course is neither a solicitation nor an offer to buy or sell futures or options. I could say this session or this webinar. And no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this presentation. Past performance of any trading system or methodology is not necessarily indicative of future results. So we have a lot ahead of us, and it's going to be a fun session, and I'm happy that you can join me in Trading Pub today. So the question, what now? Will the S&P close higher? Will it close higher today? Is that a yes? No? Do you believe that, well, today the market's already closed now, and it did close higher, but what about tomorrow? Do you think that the market's going to close higher tomorrow or next month? Well, for me, it's easier to answer those questions in the near term. So what I mean by that is, I don't know where the market's going to be in a month, but I know based on probabilities and the indicators in the analysis I do, the probability that the market could close higher tomorrow. And that's what I want to share with you today. Because normally, for traders and for short-term traders, it's difficult to look months out and to know what the market's going to do. And even those talking heads, those guys on TV that swear that the market's going to be higher in 6 months or lower in 6 months, they don't know what they're talking about. And most of the time, they know that in 6 months, you're not going to call them on it, right? So as traders, it's easier to think short term and to have a sense of direction in the short term. And with that, we can actually use that information to our advantage. But this is where many traders get stuck in trying to trade the short term because there's so many different markets and ways to trade. Well, if you could make money in a sideways market, and if you didn't need to know how much the market was going to move, just that it is going to close higher or lower tomorrow, and if you could use a strategy that could be traded on a $2,000 account or a $200,000 account and use the same exact strategy, will this help you? Will this be advantageous to you? I think that it would be for most traders, and that's why I want to discuss binary options today. So I'm going to share how to determine the direction of the market, but I'm also going to show 5 steps for selecting the right binary option to trade. But before we get into that, I want to make sure that everybody's on the same page and that you know what a binary option is. Because I've been trading in the industry for 15 years. And although binary options have been around a lot longer than most people realize, for many traders, it's new. And if it isn't new, many traders at first got introduced to binary options. It was kind of like the wild, wild west when it came to selecting your broker and hoping that your broker was legitimate. And just the way that binary options were set up. These days, it's much more sophisticated. There's more checks and balances. In the U.S., there's regulation involved. And so if you are not new to binary options, these days it's a lot easier to get going with binary options, and it's more legitimate than it has been in the past. So what is a binary option? Well, a binary option is also referred to as an all or nothing option because at expiration, it's either going to have its full value or no value. It's often called a yes-no proposition because like binary code, and this is where binary options get the name, when binary code was created for computers, it was a 0 and 1, 0 and 1, and it was off on. It was a very simple code for a computer to analyze, and with binary option, you only have 2 outcomes. Either the option is going to have value at expiration or be worthless. And so binaries are going to settle if you're trading one contract with Nadex and most brokers internationally if the option or the proposition is correct. If you were correct about the trade that you had placed, the settlement value at expiration is worth $100, and if it is incorrect, it's worth 0. So there are only 2 outcomes, but with 2 outcomes, it simplifies the trading process, and it makes it a lot easier to know what we're doing and what the result is going to be at the end of or at the option's expiration. So there are a few very distinct benefits of trading binary options. The first is that they're pretty easy to trade. If you have experience trading equity options, you'll know that there are many different types of equity options or strategies that could be used. You could trade directional equity options. You could be a seller for premium. You could trade straddles, strangles. You could trade bull spreads, bear spreads, and the sky's the limit. There's all sorts of combinations, and then when it comes to deciding on the option to trade, knowing about implied volatility and the Greeks and time decay, and when it comes down to it, there's really a lot of information for an options trader or an equity options trader to know and understand that will affect the pricing of that option before you ever even get into a trade. And with binary options, it's much more straightforward. So it's easier to make a trading decision based on what you expect the market is likely to do. Another nice thing is that the risk is defined on a binary options trade. So unlike equity options where you can be an option seller and you have unlimited risk as a seller, yes, you might have limited risk as an options buyer, but with a binary option, whether you are a seller or a buyer, the risk is limited, and you know that before you ever place a trade. In fact, the risk is only going to be up to $100 maximum per contract traded, and you're not really ever going to risk a full $100 because once you understand the nature of binary options, that's not the trade that you're really looking to enter. So it could be up to $100, but most of the time it's much less. Now, another benefit of binary options is instead of just focusing on a specific market, whether you're trading stocks or whether you're trading Forex, with binary options, there's a nice different markets that we can follow, that we can trade, and so there is a little more exposure because we can trade indices like the S&P, we could trade currencies, we could trade commodities like crude oil, and we can even trade events if that's what we wanted to do, like non-farm payrolls or Fed interest rate decisions and whatnot. So the market selection opens the door to the many different trading vehicles, which is nice. Now, if you're interested in trading binary options, the very first thing that you need to do is to decide on a broker. And every broker has a slightly different trading platform, so you want to get comfortable with your broker's trading platform. But I want to make it very easy in today's presentation because this is a question that I often get from traders who are interested in considering and playing around and experimenting and even trading binary options is, how do I get started and what broker should I choose? For U.S. residents, it's easy. If you're in the U.S., Nadex is the broker to use. And what I've done here is I've shared a website that will take you to the demo. You could sign up for a demo of the Nadex platform and practice on a simulated account. I share this because it's easy to set up an account, but sometimes it's a little tricky to find out where the demo account sign up is. So we've created a link for that. And for U.S. traders, the Nadex, North American Derivatives Exchange, is regulated by the CFTC. It's a legitimate place for people to trade binary options, and there are many safeguards. You're not trading against your broker when you're using Nadex. You're trading against other traders, and Nadex takes or charges a small fee for trades that are placed. So it's a little different from international traders, where international traders are essentially trading against their broker. The broker is taking the risk on every trade, and that's not the case with Nadex. Now, for international traders, it gets a little tricky because there are dozens, if not hundreds, of brokers to consider. And since at one point it was like the wild, wild west, and I've heard some horror stories about people having trouble taking money out of their account if they're up, or even some of these crazy rebates and incentives to get people to sign up, and then it really is too good to be true. Well, I would encourage international traders to look at IG.com. That's an IG group. They've been around for a long time. They do have affiliation with Nadex, but in my experience, for international traders, that's the way to go. They offer more than just binary options, but they also offer binary options that are going to be priced in a very similar way to what the Nadex offering is. Because when you go to bring up a binary option on IG, there's a ladder option that gives you strike prices, which you'll find in this presentation is an important part of the trade selection process that I do when I'm looking at trading a binary option. So these are the 5 steps when it comes down to trading binary options. You need to make a decision on these 5 items. You need to select the market, select the direction of the market. You need to select the best expiration for your strategy. You need to select the best strike price. This is always present with a binary option with Nadex, with international brokers. Some brokers, they don't offer strike prices. It's just whatever the current market price is for that market that you're looking at. And I think that strike prices are even better, and you'll learn why in today's session. But if you do look at IG as a broker for international traders, IG offers a concept known as a binary ladder, which is the same type of pricing that we have in the US when we're using Nadex. And then the 5th thing that we need to do is to determine an entry price. The entry price is going to determine what our risk on the trade is, what our reward is on the trade, and you could say that the entry price is the most important part of these 5 steps. And so these 5 steps are pretty straightforward, but they're crucial in selecting the right option to trade and the potential for that option to have value at expiration, which is what we want to have anytime, but what we definitely want to see here in November with some of these crazy moves that we've seen recently. Now, the first thing to do to determine the market to trade, there are a few dozen markets that you can look at, or maybe even more than that. And you might decide to branch off and to experiment with other markets and look at currencies and even look at events. Our favorite markets and my favorite markets to trade are the E-mini S&P, which if you're looking at Nadex is the same as the US 500. This tracks the S&P 500. There's the Wall Street 30, which is representing the Dow or the E-mini Dow if you're looking at Nadex. There's the US Tech 100, which represents the E-mini NASDAQ or the NASDAQ Tech 100. Those would be the three core indices to consider. With commodities, the three best commodities to look at would be crude oil, gold, and silver. So there are a few other options. You can look at corn, you can look at soybeans, you can look at the euro versus the dollar. But the nice thing about these six markets is not only are they offered by Nadex, but they're also offered by IG for international traders. So those are going to be the six markets that we focus on and the six that we're going to take a look at today. Now, when it comes to selecting the market, the nice thing is that these markets are all actively watched and followed. So you'll find that even if the S&P is making new highs, gold could be making a low or in a downtrend, or you could see that there's a little bit of a safeguard built into trading multiple markets, because although the indices are correlated, you're not going to have the same correlation with having a basket that you're following. Now, once you determine the market that you want to trade, the next decision that you need to make is the direction of that market. And when it comes to binary options, you're selecting a price, and your decision or the question you need to ask is, are you bullish or bearish? But instead of other trading strategies where your profit potential is based on how much that market moves, that's not the case with binary options trade. Because if you're looking at a strike price of 1950, which we're looking at here, this was a couple of months back now. Gosh, how time flies. But if we're taking the 1950 price and we're asking ourselves, are we bullish or bearish? We're really asking, do we believe that at the options expiration that the market will be above 1950? And if so, we want to be a buyer. Or if we believe that the market will be below 1950 or that strike price that we've selected, then we want to be a seller. So it doesn't matter how much the market moves when we're trading a binary option. It just matters where the price is above or below when we select the binary option to trade. And if you're completely new to binary options, this is what an order ticket looks like. You could be a buyer or seller at this price. And in this example, at the top here, we see that this is a ticket for the US 500. This was back when the September expiration was being traded. And the decision that a trader needed to make looking at this ticket was, do we want to be a buyer where we expect that at expiration price will be above 1943, or do we want to be a seller where at expiration we expect price to be below 1943? Since we see the 4:15 p.m. expiration, this is a daily expiration for this example, and we see that the bids at 54, the offers at 60. Now, as a buyer, we would believe that price will be above the strike price, which is 1943, so greater than 1943 at this options expiration. And so as a buyer, we're going to pay the offer price. Yes, with Nadex, we can enter a limit order and use a lower price if we wanted to. That's one benefit that we have with Nadex and US trading. But buying at the offer, if we want to just get into the trade, we buy at the offer. And based on this 60 price, remember that with binary options, they're going to expire with a value of 100 at expiration or a value of 0. So if we're paying $60 for this binary option, and we know that the max reward on this would be 100, or the value of this option at expiration, would be 100, we can determine our max reward. Our max risk as a buyer is what we pay. Our max reward is the difference between our risk and that $100 price point at expiration. And so at expiration, if the option was to expire worthless and have a value of 0, then we know that our max risk is exactly what we paid, and that would be $60 in this example. If you're a seller using the same price points, as a seller, we would believe that price is going to be below the strike price at expiration, so below 1943 at the end of the day. And as a seller, we're going to sell at the bid price. So we're going to sell at 54. And again, at the expiration, the option is going to have a value of 100 or a value of 0. So if we sell at 54, that's the max price that we're taking in, that max reward of $54. And we could determine our max risk just by taking that max reward and deducting it from the $100 full profit potential if we're right to get the max risk on the trade, which in this example would be 46. Now, let's take a look at just a few more things, and then we're going to look at a chart, and I can also address a couple of questions. I want to get through these slides first. So if anybody's asking questions, I'm not ignoring you on purpose. I want to go through some slides, and we're going to take a look at some charts, and we're going to have more than enough time to get to any questions that might come up during the presentation. So just as a recap on risk and reward, because this is an important part of selecting a binary option. It's knowing what the reward is and the risk before you ever get into a trade, and why it's attractive, because there are no surprises if you're trading a binary option and you know what your risk and reward is before you ever go to place a trade. So with Nadex binaries, knowing that they settle at 0 or 100, as a buyer, your max risk is going to be the price that you pay for the option. So your max reward is the $100 minus the price you paid. So if your risk is the price that you paid, your max reward is 100 minus the price that you paid. As a seller, your max risk is $100 minus the price that you sold at, or the price that you received to sell that option, to be more accurate. Now, your max reward is the price that you received when you sold that option. So real quick snapshot here with risk and reward. One nice thing about the trading platform is that it lets you know what the risk and what the reward is of that trade that you want to take whenever you enter the price that you want to sell or buy at. Now, determining the direction of the market it takes more than just deciding you want to be a buyer or a seller, because just saying, hey, I think that the market's going to be up today, that's more of a gamble. I like to use technical analysis, and as a technical trader, I believe that what has happened in the past can be used to help us and to give us an edge with what might happen in the future. So I believe that using technical analysis that indicators and patterns and market behavior repeats, yes, it's not always perfect, but over time I believe that that information and technical information can be used for us to make sound trading decisions and to benefit from repeating patterns in the future. And to determine the direction of the market, I like to use a concept that's known as the power crossover method, and I use daily charts to identify potential moves in the market, and more importantly, when it comes to binary options trading, to determine whether or not a market is likely to close higher or lower on that trading day. So let's take a look at the chart. Let me end this real quick, and let's go to some charts, and I'll show you what I'm looking for to determine the direction of the market. So here we have a chart of the E-mini S&P, which represents the S&P 500, and it's the price, the indicative index that's used for Nadex binary options. And using the power crossover method, when we use the power crossover method, we use stochastics, RSI, and MACD to determine whether or not the market's bullish or bearish. And when we have all three of these indicators lined up based on our rules, we have bearish or bullish market conditions if all three are bullish based on our rules. So we have a green bar in that scenario. We have a red bar if the market's in a downtrend and all three indicators are confirming the trend and the likelihood that the market is going to move lower. Whenever there's disconnect, we have a black bar. So a black bar tells us that there's indecision in the market or possible change of direction. So as a trader, I'm focusing on these red bars and I'm focusing on these green bars. And this strategy was initially developed to swing trade stocks and options. So the idea would be that we would look for a buying opportunity or look for a selling opportunity, and then based on market conditions, get into a trade and be in the trade for maybe 8 to 12 days as a swing trade. But when I started to look into binary options and to determine a way that we could approach binary options, and I needed to determine the direction of the market and have an approach that we can test and use for future considerations, I discovered that the direction of the market based on the power crossover method can help us determine the likelihood that the market will close higher or lower on the next trading day. And by using daily expirations for binary options, we can make a decision on whether or not we want to buy a binary option or sell a binary option. So what I'm looking for and what I expect is that if we have an uptrend day, like we have back here, this was back on October 22nd. If we have an uptrend day, and on the next trading day, so this would be the trading day that we're looking to trade, we trade one tick or pip if you're a Forex trader. It doesn't matter how far it moves above that uptrend day's high, as long as we move above that uptrend day's high, which means that we're making higher highs, right? As long as that happens, I know that there's a high likelihood that the market is going to close above the previous session's close. So based on this information here, I have an uptrend day. The high of this bar was 1943 and a quarter, and a 1943 and a quarter. That means that on the next trading day, as long as we trade one tick above the high of this bar, this is, I'm off a little bit. Let's make it right, just in case anybody wants to go back and look at a chart. So as long as we trade above 1943 and a quarter, I know that there's a high probability that this day is going to close above the previous day's close, which happens because the previous day's close was 1925, and on this day it closed at 1946. So if I know that there's a high probability that the market's going to close higher if we have uptrend conditions, or that the market will close lower if we have downtrend conditions, I could use this information to not only to determine whether or not I have a strike price to select and I want to be a buyer or a seller, but I could use this information also to determine when and where and what price I enter a binary options trade. There was a question that popped up and said risk 60 to make $40, right? And for some people, the idea of risking more than you're looking to make on a trade seems ridiculous. But the key is the probability that that trade will be successful, because that's the most important factor when you're looking at risk and reward. Because if you told me that you wanted to make $80 for every 20 you risked, that might sound good at face value. But if based on the indicators and based on the strategy that you're looking to trade, you had a 10% probability that the outcome would be successful, that would be a lousy risk reward, even if you were looking to make 4 times what your risk was, right? So the probability is the most important factor when determining or when analyzing that risk and reward. Because if you have a 10% chance that the market is going to close higher, it doesn't matter if you're risking $20 to make $80. That's a losing scenario in the end. Now, if you're looking to risk $60 to make 40, and the probability that that trade will be successful is 80%, that is a winning scenario over time. And that's why I use probabilities when trading binary options. Now, let's look at the next trading day. So here we have an uptrend based on the power crossover method rules. But again, the key for binary options trading is, okay, we have an uptrend, but for the day that I'm looking to trade, is the market likely to move or to close higher or lower based on what's going on in the market. So the high of this bar is 1956 and a quarter. Let me go ahead and enter that here. 1956 and a quarter. So if on the next trading day we trade one tick above this high, so 1956 and a half, doesn't matter if we move up to 1958, 1960, or 2000. If we close, or if we move one tick past this day's high, I know that the probability that the market will close higher, in this case, is 70%. Why? Because I've done the calculations. But I could use this information to make a trading decision. And on this day, we see that we open up at 1946.50. The high of the bar was 1960 and a quarter. So on this trading day, we move through the previous day's high. We make new highs, and I know that the probability that we'll close higher is 70%. Well, let's look at the next bar. The high of this bar is 1960 and a quarter. And on this day, we move up to 1959. So 1960 and a quarter was the high. 1959 was the high of this day. What does this mean? Well, it means that since we did not make new highs, the probability doesn't apply. So this would be a day where I would not be a buyer and I would not buy a binary option because I don't believe that there's a high probability that we will close above the previous day's close. The previous day's close was 1959 and 3/4. On this day, the close was 1957. So because we did not make new highs, the probability that we'd close above the previous day's close was lower, and that would not be a day that I would trade. And in this case, it proves to be correct. We were unable to close higher. This would not have been a winning binary option scenario based on the rules and based on the 5 steps that I'm sharing today. And this would not be a trade that I would get into based on the rules. Now, the high of this bar is 1959. So on the next day, if we move anywhere above 1959, I believe that there's a 70% likelihood that the market will close higher. That's what happened. We gapped up. There's a 70% chance that we close higher, and we do at 1958. Just go through a few more examples. 1980 and 3/4 is the high of this bar. And on this day, we have an open. We're trading above this value, and this day we close lower. Okay, so this would be a losing day based on the idea. We have, in the example that we've seen so far, a winning day based on the idea, a winning day based on the idea, a no trade based on the idea, and we now have a losing day. Well, let's go back to that 60-40 idea. If we were risking 60 to make 40, and we believe that the probability of success is 70%, on the winning days, if we made $40 on the one win and $40 on the second win, we made $80. And on this day, if we lose $60, we're now up $20 even though we're risking 60 to make 40. That's why risking 60 to make 40 makes sense in this scenario. Now, there's always the potential based on the way the market's moving. You don't have to get in at 60. You could be a buyer at 50 and you could risk 50 to make 50. Or you could be a buyer at 40 and you could risk 40 to make 60. But for me, using these ideas and making a decision to be a buyer or a seller, I have no problem having an inverse risk reward relationship because I know the probabilities. Now, let's take a downtrend to give you a downtrend example, because recently all we've had are uptrend examples, and it's easy to see that, I could just go through the next month and you'll see that the probability really worked out in our favor. And I also want to show what happens when we have a downtrend. With a downtrend, it's the exact opposite. So if we take the low of this bar, which was actually 1920 and a quarter, 1920 and a quarter. So I have all three indicators saying that there's a downtrend based on the power crossover method. And if we, on the next day, if we move below 1920 and a quarter, then we have a downtrend and I want to sell a binary option. And I know that 70% of the time, the market is going to close lower, and that's what happens on this day. So it opens at 1921.50. It trades through 1920 and a quarter. It actually moved back up to 1931 and a quarter, but then eventually closed below the previous day's close because we had a downtrend and we made new lows. The continuation of that downtrend is what matters. And in this example, this is where it might make sense to sell a binary option at 40, so you're looking to make $40 and risking 60 if you know that 70% or more of the time the trade is going to end up being successful based on this idea in the rules. And because we traded up to 1931 and a quarter, you could have even had a more favorable risk and reward because the risk and reward will change throughout the day while the market's moving. Just to look at a couple more examples here, the low is 1893 and a quarter. So on this day, we need to move through 1893 and a quarter. It opens at 1899. We move through 1893 and a quarter. We close below the previous day. Or the previous day's close. So being an option seller is what we want to do. And based on the idea I'm going to present, this would be a day that worked out. On this trading day, 1865 is the low, so we need to trade below 1865. And 1865 is the low of both days. So we didn't take out the low. So based on the rules, this was not a continuation of the downtrend. So I would not want to be an option seller. And using the rules here and the previous day's close, we actually closed higher. So this day would not have continued the trend, and this would not be a day that I want to be an option seller because I need to take out this low. So basically, I'm looking at a chart trying to determine the direction of the market using power crossover method entry rules. And if we have an uptrend on the trading day, I want to make new highs. And if that's the case, I want to be an option buyer. If we have a downtrend, I want to take out the lows of that downtrend day. And if that happens, I want to be an option seller. And with my analysis, I know that 70% of the time, if those conditions are present, that the trend will continue. I could use that information to select the binary option that I want to trade. So let's go back to the presentation here because I want to look at a few other scenarios that are really going to be important when it comes to deciding on the right option to trade. So looking at the charts, we have an idea of whether the market is likely going to move higher or lower, and we have rules that we're following. The next thing is to select the best expiration for your trading strategy. Now, this is where I prefer using daily expirations until I see that intraday expirations are a time frame that provides some value. You see, you could trade, I think international brokers, they might even have like minute expirations. I think Nadex went to 20-minute expirations, or they're considering it. The 20-minute expirations, the short-term expirations for me right now, based on my analysis and work in binary options, for me, it's a bit of a gamble. I don't have a strong, high probability that I could look at to base a 20-minute decision on. But with daily expirations, I have two things going for me. One, I could use end-of-day data to make a decision for the trading day, and I could test that data, and I could go back years to determine probabilities. The other advantage that I have is I only have to worry about the spread getting into the trade because I will hold the trade to expiration. So if you're trading intraday and you're trying to get in and out of a binary option trade, you have to worry about the spread getting into the trade and getting out of the trade. For me, based on the rules and using a daily expiration, I'll just hold that trade to the end of the day, let it expire, so I don't have to worry about the spread in and out. Now, another reason for liking the end of day expiration is that we can use the power crossover method buy and sell signals to determine end of day probabilities. And I said that going back over the last year for the E-mini S&P, the probability that the trend continues based on the rules that we just talked about is 70%. For the YM, it's 73%. For the NASDAQ, it's 80%. So if we have an uptrend day and on our trading day, we trade through the uptrend day's high, the NASDAQ will close above the previous day's close 80% of the time going back for an entire year. Now, same thing for a downtrend. Here are the commodities that I like to look at, or my favorite three. And with the commodities, these are the probabilities. So you see that gold actually has the best probability. The trend continues 86% of the time. This is data going back a year. Silver, the trend continues 72% of the time. And with crude oil, the trend continues 79% of the time. So with binary options, it's all about probabilities. In fact, the probability that the market will close higher or lower when you look at a binary option, it's priced into the binary option. So that's the pricing model that they're using to give you the price on when you go to place a binary options trade. We're using daily probabilities to analyze the market, and I create this table every single day based on what's going on with the power crossover method in the core markets that we like to look at. This was today's table. So with crude oil, we actually had a triggered sell. So that means that crude oil traded below the previous day's close. And with crude oil, the idea was that 76% of the time, the market will close below the previous day's close. And that's what we would expect if it's triggered, and it did today. Crude oil traded and closed below the previous day's close. The E-mini S&P also had a buy signal. It was triggered. We took out the previous day's high, and we would expect that 70% of the time the close will be above the previous day's high, and that's what happened in the E-mini S&P. It closed higher. The NASDAQ, we had an 80% chance that the NASDAQ would close higher. That was triggered, and we closed above the previous day's high with the NASDAQ. With the Russell and the mini Dow, we also closed above the previous day's high, and the probability table gave us an opportunity. These are probabilities that I calculate daily, and these are the probabilities that I use to make trading decisions when I go to buy or sell a binary option. Now, once you have a market that you're looking to trade, once you have the direction, whether you want to be a buyer or a seller, and once you have an expiration, whether it's intraday, daily, or weekly, the next thing to decide is the best strike price for your binary option trade. And this is where I go back to the power crossover method once again, and I use the close of the previous day to determine my strike price. Because with the strike price, yes, you might expect the market to move higher or move lower, but the strike price that you select is going to be one of the most important decisions that you make, because if the market moves higher, what's your reference point? And so this is where I'll use the previous day's close for my reference point. And if there's an uptrend, I will select a strike price that is equal or less than the previous day's close. So what I'm saying is that if there's an uptrend, and I expect that 70% of the time, if there's an uptrend that is continued, we're going to close above the previous day's close, then I can use that information and I could place a trade based on the previous day's close. As long as we select a strike price that is equal or previous to the, or equal or less than the previous day's close, then the market can move wherever it wants, and we could still have a winning trade as long as the market stays above the previous day's close. The opposite is for a downtrend. With a downtrend, we're looking to select a downtrend strike price that is greater than or equal to the previous day's close. And so going back and thinking about the chart, if we have a downtrend and the trend continues, we make new lows, doesn't matter where the market ends up, if we select a strike price that's equal or above the previous day's close, it's going to be a winning trade, a winning scenario. And if we have probabilities, and we know that 70% of the time the trade is going to be successful based on historical probabilities, or we're using that information to make our trading decision, we can then do the next thing, and that is to determine the entry price. So our strike price is based on the previous day's close. Our entry price is going to be based on the probability. Okay, so binary options are based on probabilities. So use probabilities to calculate entries. So if you have a probability of an uptrend continuing, and you see that the probability that the market will continue to move higher is 70%, then we could buy $10 better, beating that probability. And in this case, for like the E-mini S&P as the example we had earlier today, if we could buy at $60 and we know the probability is 70%, then I'll be a buyer at 60. I'll buy at 60 and risk 60 to make 40 if I know that roughly 70% of the time that trade's going to be successful. Probability of a downtrend is the same idea. The probability that the downtrend will continue is 70%. We want to sell $10 better. So in this case, as a seller, our risk is the difference between 100 and our selling price. And if we sell $10 better, that would be 40 or higher. Now, let's go back and let's look at this probability table, because the concepts that we just reviewed are important to make the selection to select the binary option that you want to trade. You need to select your market. You need to select the direction of the market. You need to select your strike price, and you need to determine your entry price. And this is what I do daily when it comes to making a trading decision. So take the E-mini S&P or US 500. If I want to be a buyer and the previous day's close was 2039.75, and I believe that 70% of the time the market is going to close higher if we take out the previous day's high, then I want to be a buyer at 60 or lower. If I buy at 60, I'm risking 60 to make 40. I could buy at 50 and make 50, or I could buy at 40 and make 60. This is it all depends on what the market's going to give me on the day I'm placing the trade. But worst case scenario, I'll buy at 60, and if I could buy lower, that's even better. And if the probability is at 70 over time, I have an edge in the market. Right? So that's what I'm looking to do. And this is the information I use to make a binary options trade. Now, going back to the E-mini S&P and using the E-mini S&P as an example and taking the 5 steps, I select a market. Okay, I'll use the US 500 or E-mini S&P as an example. Select the direction. Today, the market was in an uptrend based on the rules that we discussed. The expiration daily, select the strike price. Well, the previous day's close was 2039.75. So the strike price I want to select is going to be a strike that is less than the previous day's close, equal or less than the previous day's close. And today, the closest strike price to the previous day's close was actually at 2039. Now, this is where it should say step 5, but to determine the entry price, if I have calculated the probability being 70% and I'm looking to buy at $10 or better, then I'm looking to buy at $60 or lower. That's going to give me a risk reward that is risking 60 to make 40 or better. It's okay if I'm risking 20 to make 80 or 30 to make 70 or 40 to make 60. I could do okay if these probabilities are 70% or better. Now, we could take a look at a few examples, and we can also address a bunch of the questions that popped up. I'm flying a little blind here when I'm running from the slides, and I know that there's a lot of information to take in, but it comes down to these 5 key decisions, and I calculate or base my decision based on the power crossover strategy, and I want to get the questions, but I know that a lot of times when I start to share the power crossover method and the ideas and the probabilities, people will say, well, how do I get the probabilities? These are probabilities that I calculate, and we share the yearly and the 5-year probabilities. Now you could use this same concept and this same structure and the same foundation, and instead of using the power crossover method to select the direction of the market, you could use your own trading approach or own trading strategy. You can say, hey, let's say you use moving average crossovers, and you say that if the 10-period moving average is above the 30-period moving average, I have an uptrend, and if the 10 period is below the 30, I have a downtrend. And you could take those signals and you could determine the probabilities on your own and use this same model. So you don't need to use a power crossover method. I find that the probabilities are very attractive, and it makes it easy to answer all of these questions that you need to answer anyway if you're going to trade the power crossover method. What we've done though is we do have a special. If you want to get the probabilities that I create daily, you can go to rockwelltrading.com/binary. You'll get access to the probabilities that I'm calculating, so you don't need to calculate them on your own. And you'll know the strike price and entry parameters. So if the entry price and the strike price, if that concept made sense, but it was just a little much to take in all of this information today, I create that daily when I'm looking to trade the next trading day. And what we've done is we also offer text alerts, and right now this is a bonus for anybody that signs up. Text alerts, you could sign up for that. So we mentioned in the promotion of this session that you could really do this on the side. Well, I'm looking at the markets every day. I'm looking for these opportunities. I'm trying to make a decision based on what's going on, and I'm looking to see if there's a continuation of the uptrend or downtrend based on the rules that we have discussed. And if those conditions are present, we send out a text alert, and that alert shows you whether or not I'm looking at the S&P, the mini Dow, the strike price, and the entry price. So I just wanted to share this, and now that I'm off of the slides, we could go back to the charts and we could answer some of the questions. I think that Raleigh was keeping tabs of the questions. And last but not least, the last slide of the day I want to share, contact information, rockwelltrading.com. Shoot me over an email, support@rockwelltrading.com. You could always give us a ring. And now we'll go back to the charts, and I'll bring up my Omnovia panel so I'm not flying blind here. And there we go. All right, hey Raleigh, were there any questions that popped up that you'd like me to address?
Yeah, there were several that came up. It was interesting, Mark. I took note of them, and you did address several of them as you went on in your presentation. But let me start with one that came up almost initially when you were talking, and that was, like Trade Trick said, for example, isn't the risk to reward ratio upside down? I mean, you're looking to risk 60 to make 40. And so I remember when you were first talking about that, a lot of people that are used to, let's say, day trading futures or whatnot, we're looking for different type of risk to reward ratios.
Sure, sure. And you know, this is where a lot of people use the rule of thumb that your reward should be greater than your risk. And that is a great rule of thumb for someone that doesn't know anything about trading. And it doesn't, I mean, even if you know a lot about trading and you just feel comfortable with having a reward that's greater than your risk, it's okay. But the truth is the probability is going to be the next question that validates whether or not your reward being greater than your risk actually makes sense. Because as an example, if we make $1.25 for every dollar risk, so dollar reward, $1.25 reward, dollar risk. If that happens and we are trading with a strategy, let's say that it has a 30% winning percentage. Making $1.25 and risking $1 with a 30% winning percentage is a losing scenario. So the reward being greater than the risk is a great idea in theory, and it helps people when they're getting started with trading, and you might find that it's comfortable for you in your trading, But if the winning percentage for the method that you're using is lower than 50%, it doesn't matter. The reward being greater than the risk doesn't save you. With like day trading, we often use the 1.5 reward to $1 risk, and with a 50% winning percentage, that's fine, because if we're making $1.50 for every dollar that we lose, it's a profitable scenario. But with binary options, it could be that there's a high probability trading scenario for you to consider, and you might not be able to get anywhere close to the 1.5 reward for every dollar risk, because the probability that the trade is going to be successful is so high. So you either skip the trade altogether, or you decide if there is an appropriate risk reward based on the probability of that strategy. And that's what we do with our probability table. Our entry prices, our minimum entry prices, are always based on the probability that the market will be higher or lower the next day. And so our entry prices are derived from the probability. So it's okay if we're risking more than we're looking to make on the trade, just because the probability over time is so high.
And that's great, Mark, because I think that addresses another question that came up, once again, as people are trying to wrap their heads around the probability. It's like the probability that the trade is going to end in the money is the one that has the greatest amount of risk associated with it. And so, so the question was, if you have a higher probability of success, is your risk to reward smaller?
Yeah, and so if there's a higher
And
probability of
yeah,
success, your risk is going to be greater for the potential reward, because in theory, binary options pricing is telling you what the probability is, right? Because if you have an
right.
ability to buy the 2000, let's say right now you have an opportunity to buy the 2048 strike price for the E-mini S&P. And let's say that the 2048 strike price, you could buy that for $60, which means that as a buyer, you're risking 60 to make 40. Why is the probability based on that? Well, it's because the pricing of that option is considering that there's a 60% chance that the option is going to expire at 2048 or higher, right? So we could use that information to we could use the pricing of the binary option to even interpret the probability that the market is going to be above or below that price at expiration. We just take it one step further, and we use those probabilities to, on a daily basis, to determine the entry prices as well.
Okay, so Mark, a couple other questions here, and there's some more that are coming in. Let's see. So several of the questions were, so how do you determine the probabilities? And I believe that Mark covered that extremely well, because it's the power crossover is what you're using to determine the likelihood or the probability of what the market's going to do on the following day where it's going to close. And I think, Mark, that you've got data going back how far on that? You go back
Yeah,
pretty extensively, don't you?
in our newsletter, we offer a 1 and 5 year probabilities, but we've looked back to 10 years, and they, historically they fall in a sample that, or an expectation that is consistent over time. And so even though there might be a slight difference, like right now the 1 year probability for the E-mini S&P is 70%, and the 5 year probability that the trend continues is 83%. Even though there might be a slight difference depending on the current market conditions, the analysis has gone back for years, and because our pricing is based on the probability, our pricing is adjusting to current market conditions. So if the probability starts to drop, we just look for better risk reward trades. If the probability increases, where the potential for a winning trade is extremely high, then we're willing to risk more to have a very successful outcome on that trade.
Okay, a couple of technical questions here. Gary says, hey, Mark, if the price went one tick over the previous day during the Globex, does that still count, or do you only count normal market hours? And I think that probably referring to how does Nadex
Yeah,
treat
you
that?
know, it's a great question, and we actually have done the testing during normal market hours. So here, when I'm looking at this information on this chart, it's showing us data from 9:30 Eastern to 4:15 p.m. Eastern time, because that's when Nadex, that's when Nadex officially, those are the prices that Nadex are using for their binary options. And all of our probabilities, since it's based on the 415 close, all of our probabilities are based on 415, not overnight trading.
Okay. And several questions came up, Mark, with regard to 20-minute expirations, but I think that you covered that. The question was, can we use the power crossover to assist us in trading the new 20-minute expiration format that's just been released for some of the index markets?
Yeah, and you know, I would love to say, yeah, the 20 minutes are great, but right now I am very cautious of them because, in general, the very, very, very small time frames are meant more to. Let's put it this way: a lot of people who like the excitement of binary options and want to gamble in the markets are attracted to these small time frames because you get these quick payouts and it's fun. But as a trader, we're trying to take advantage of probabilities in the market and have an edge. And so most of the traders that I know are focusing more on the other time frames rather than these short, quick intraday times. Those are normally meant for people who are gambling. Now, if that changes, I say that that's my opinion for now, because of course, if I find that we have an opportunity and edge on these smaller time frames and it's consistent, then I'd be happy to trade them. But for now, I'm just focusing on the daily because of my experience and also my experience working with binary options traders. The daily seems to be the best time frame to be trading.
Sure. Mark, there was a question from a trader that says, hey, are these indicators only available on Trade Navigator, or are they available on Thinkorswim or NinjaTrader?
Yeah, you know, I didn't. I mean, the indicators in the power crossover method alone can be an hour, 2 hour presentation. So we didn't really spend too much time discussing the components behind it. But right now, we do have a version of Trade Navigator that's preloaded for anybody that's interested, where it's already set up for you, and it includes all of the rules if you want to swing trade stocks and options. We're in the process of setting them up for Thinkorswim and TradeStation. So we'll probably have it available for Trade Navigator, TradeStation, and Thinkorswim. We don't have any plans to branch out beyond that, at least right now. We also, though, if you go to rockwelltrading.com, you'll see that there's a DVD offer, and the DVD offer explains all of the rules behind the indicators and everything. So if you're proficient with your trading software and you're comfortable with setting up your indicators, the rules are explained on the DVD for people who would rather have it all set up for them than TradeStation, Thinkorswim, and Trade Navigator are the best options. And right now, we only have an offering in Trade Navigator.
I got you, Mark. So it sounds to me like, there's a couple of options here with the special that you're offering with the newsletter and the alerts that you've got. Sounds to me like you're doing all the work and you're just giving everybody a nice little grid on a daily basis. When does that come out? The evening before or something?
Yeah.
And just advises what the probabilities are?
Sure. I mean, Raleigh, I know that you have some familiarity with the power crossover method, and I mean, basically, it's a method that we've been using for years, and then we shared it with our traders, and so we shared the rules, and then we had traders that said, I don't want to have to worry about setting everything up. So then we created the PowerX analyzer, which everything's pre-programmed, and then with the binary options, even though we shared how to calculate the probabilities, which is taking the higher closes and the lower closes and creating those probabilities. And we had traders that said, yeah, I like the idea. I love how it makes it easy to select an option to trade, but I don't want to do all the work on my own. And that's why we developed the binary options probability table. So you're right, Raleigh. We update it every evening because it's all based on end-of-day data, and we send out an update email to everybody who signed up that is normally sent out between 9 and 9:30 Eastern time in the evening. And that just says, hey, the binary newsletter is ready. And then you log into our website, you get all of those prices, and it's updated and ready for the next trading day. And gold and silver, they open early. Gold opens at 8:20 Eastern. Silver opens at 8:25. So those would be the very first times you could start looking at options based on these ideas for the next day.
Wow. Well, I tell you what, that's great. I think that's a heck of a service, and I'm just, I'm sort of distilling things myself here, Mark, as I'm looking at also sort of branching out and exploring how Nadex binary options might be a nice way for me to diversify my trading, because I'm primarily an intraday trader for the futures market, and I'm sitting here going like, wow, I can open up a demo account in Nadex for a couple of weeks, doesn't cost you anything. I could subscribe to your service for what's it, $47,
47,
and in a couple of weeks I'm going to get a pretty good handle as to how your service works and how I can use it on a demo account to prove to myself if it's something that has any value going forward.
Yeah, and that's exactly
I think that's a tremendous service.
Thank you, Raleigh. And that's exactly what we would suggest, to start out with a demo, get some experience practicing these orders. It's really easy and straightforward, but before risking money, figure out the platform, get comfortable with what you're doing, and here you have the guidance, and it's all set up for you. And it's either a starting point or an ending point, depending on where you want to go.
Excellent, Mark. Well, folks, do you have any other questions here for Mark? Why we still have him here? Well, I know it's kind of interesting, Mark. A couple of people have said, I know that the session is closed. I don't know if you want to give us an advance peek, but if you were to look at the E-mini S&P or some of the other markets, do you have any thoughts at this point in time as to what the probability is for tomorrow since those markets are closed?
Yep, we could do that. So someone asked what Transact is, and so I'm a futures trader as well, and that keeps popping up because it's connecting to the software. So disregard that. But tomorrow, so this is what you'd see in our probability newsletter tomorrow. The E-mini S&P made a high of 2054. So tomorrow, if any time during the day we close, or not we close, but we trade above 2554. If we trade anywhere above 2054, not 2554, 2054, excuse me. I'll write it down just to make, so this is what we're expecting tomorrow. There's a buy signal if we trade higher than 2054, and this would be an S&P. And if that happens, there's a 70% chance the market will close above today's 2048.50 close. For binary options, right now we're looking at a 70% chance, and so we want to be able to buy a binary option that is $10 better, so $60 or lower. And because the previous...
Yeah, Mark, I just wanted to jump in here for a minute. Your screen may be frozen because right now we're looking at a screen, and it's got your reward and risk, and right in the middle it says connecting to Transact server in live mode. Please wait. So it looks like if you're typing on something, we're not seeing it.
Okay, let me see if I could reconnect and see if, because I see what you're seeing too, and well, I could type it into the It doesn't want me to type here either.
Oh my gosh.
But so basically, I mean, we don't even need to type. The previous day or today's high is 2054. So we have a buy signal if tomorrow we trade above 2554. It could be one tick, that's it. And if it does trade above 2054, then we believe that there's a 70% chance based on historical probabilities that the day will close above today's 2048.50 close. So we would want to select a strike price for trading binary options that is equal or lower than today's close. So today's, I'm pulling up the strike price that I would use for tomorrow for the
Okay.
S&P. So today's close was 2048.50. So I would use the 2048 strike. And since there's a 70% probability that the market will close higher if we have a buy signal, I would want to buy at 60 or lower. So in our probability newsletter, it would say ES buy, and the trigger price would be 2054. The previous day's close is 2048 and a half. The strike price we use is 2048, and it would say the entry is 60 or lower. And because the trading time for this market is 9:30 to 4:15, that would be the trading window. And that's the information that we would use. And hey, Albert, good to see you. You take care. And we would use this information and share it in our newsletter as well. So if we go through,
Man,
we look
that's
at some of the other markets. I'll give you all of them. With NQ, the NASDAQ, the high is 42.4875. So if tomorrow we trade any price above 42.4875, then we have a buy signal. And the close today is 42.38. So tomorrow I will use 42.36 would be my strike. We have a real high probability in NASDAQ, so it's 80% probability. So I would buy the 42.36, excuse me, the 42.36 strike at $70 or lower tomorrow if we trade through today's high. Looking at YM, another example, and you guys could write this down if you have a demo or sign up for the newsletter, and all of this information is provided to you. So with YM, today's high is, let me bring it up. So YM made a new high, 17,700. So tomorrow, if we trade through that price, 1 point higher than 17,700, then we have a buy signal. And today's close was 17,652. So we would use the 17,650 strike because that's the closest, but below today's close. And the probability is 73%. So we'd be a buyer at 63 or lower. And so Comrade has a great question. He says, why did you select a $10 difference from the probability percentage to get the entry of 60? So we're using a $10 difference because we want to account for any discrepancies. I mean, probabilities, we could use information and probabilities to make trading decisions, but there's absolutely no guarantee that tomorrow the market's going to close higher or lower. It could be that tomorrow we close lower, and it could be that the next day we close lower, and then maybe the probabilities start to shift lower a little bit. Also, it could be that we miss a trade just because there wasn't an opportunity to get in at the price that we wanted to. And so rather than using the exact probability to create our entry price, we wanted to do better than that. And that gives us a little bit of a buffer and cushion just to help account for those situations. Oh, and Albert, if
okay.
you were listening to what we were saying, the tails matter only for the continuation of the trend. So the tails are only relevant if we expect the market to take out the previous day's high or the previous day's lows in a downtrend. They are not an issue to determine the strike price.
All right, super. And folks, once again, appreciate your patience with this. Mark's screens are kind of frozen at his end, so he doesn't have the ability to type and to present the kinds of things that we're answering in the questions here. And he was just verbalizing, if you will, what the probabilities are going to be for binary option trades tomorrow based on the close in today's markets. So
Yeah, and you know, Raleigh,
from that perspective, really do it. Yeah.
I'm sorry, there was a as far as the tails go, I was assuming that he was referring to the like you're right with I prefer bars rather than candles. I assumed Albert was asking about the wicks and the highs and the lows. Maybe not.
All right. So from that perspective, Mark, I want to thank you so much, for the time that you spent to put this presentation together and to give it. I know that for many traders, the concept of Nadex or even the term binary options by itself it sounds complex right off the bat, but it is pretty straightforward. And it is based on the probability of what you think the market is going to do, and then you place a trade based on that. And for me, what's interesting is I need help when it comes to determining what I think the market's going to do. And you're basically saying, hey, I have a technique here that says based on where the markets close and looking back over years and years of history, I've got a probability based on what's happened in the past as to what it possibly could do in the future. So from that standpoint, looking at a daily expiration of binary option, there's a big aid for that. So really do appreciate the thought that you put into this, Mark, and even down to the extent that you've distilled it to a simple grid and now a text alert that you can provide to traders the day before, the night before, so they can make some decisions as to what they might want to do on the following day. So once again, with that, really do appreciate your time. And folks, as you can see, there's a special offer that Mark has available here. It's $47 a month for the service that he provides, which includes as a bonus these text alerts. So for those of you that are really interested in giving a serious look at this, if you're not trading, if you are already having a Nadex account and you're trading it and you'd like to take a look at something that has the potential to provide you with some additional insight into the markets, this looks great. If you're new and you'd like to open up a demo account, from that perspective, you have, there's, I know that Nadex will make a practice account available to you.